have a beautiful heat map. And, some people think of crypto as a safe haven, which I do not. But the price of gold was actually above $1,400 today, hovering right around a 6-year high. Overall, gold is up about 6% in US dollars in June, which is the strongest one-month rally in 2 years. Joe Cavatoni is the U.S. Managing Director of the World Gold Council and joins us now. You were sitting on the sidelines listening to our Bitcoin conversation.
Absolutely.
But gold is the ultimate safe haven. It has always been considered that way. Why do you? What can you really attribute here to this rise?
I heard words like hype, excitement, speculation.
Yep.
All of those things are great in the cryptocurrency space. Gold is a real asset that people can analyze. It's pretty simple and it's very basic to understand. Economic expansion, momentum in the market, growth overall or uncertainty about market structure and market reform, and ultimately the opportunity cost. So you can get organized around the way you look at gold, organized around the data that's available to you, and what you can see when you analyze in a simple way, gold performs in good times, and also when it needs to perform as a safe haven asset, as you see now. We've got uncertainty around the political landscape. We've got Brexit still on the horizon. We've got Iran on the horizon. Maybe Mexico goes away, but China tariffs are still in place. People are unclear, uncertain, and able to analyze gold and simply say, as a safe haven asset, it does what it's supposed to do on the tin. S&P 500 last week was down maybe 4 or 5 times over the course of that week. 1%. What did gold do? It reacted appropriately as a safe haven asset, up 1%. When you look at other assets purporting to be a safe haven, it's very difficult to do that analysis.
Now, Joe, as you say, we do have uncertainty right now with a number of areas, and yet we are still seeing a number of all-time highs recently, not only for certain markets, but for certain companies, their stocks. And so the question is, and I guess you alluded to it there, but those who frame gold as something that should go up when the equities are down, but it sounds like it can also behave in lockstep and go up when things are good.
It is unique as a commodity. It is unique as a real asset because it has a dual nature. Think about the strategic drivers of gold. They are economic expansion. So when people create wealth or wealth is created with anyone, they can buy into investments, they can buy into jewelry, they can buy into technology. We talk about laptops, phones, and other items. In there, gold is used in a technical sense. So during economic expansion, it performs exceptionally well. And it also performs when people have concerns around the economic outlook or concerns around market stability or political landscape. So it will perform well as that safe haven asset. It's the only commodity that have that true dual nature.
Joe, I'm curious at the World Gold Council how you think about the conversion of gold to have the physical gold, right? And I think a lot of people want to have the physical because they think, well, the world's going to collapse and I'm going to need gold to transact in some kind of future dystopian outlook, right? But I kind of hear you saying that you're talking about gold as a portfolio diversifier, right? It exists in a portfolio for specific reasons, and it's not necessarily, like the bid for gold isn't necessarily that people want to convert to the physical. It's just that they're happy that the price of gold tends to be a counter to what's happening in riskier assets.
It can be analyzed in a portfolio with the same level of sophistication of any other asset, whether it's emerging market equities or U.S. domestic equities. You can do the same analysis use our website, for example, goldhub.com. You can go to Gold Hub, you can get the data that you need, you can analyze it in the same way. But the important thing is, when we talk to our investors and clients around gold, we don't isolate one particular way of owning it. We talk about it in all of its forms. You'll see in the press that pensions will hold bars. Why? Because they want that, and they're actually looking at that cost-effective mechanism for owning it. Others simply choose to buy into exchange-traded funds, and that's what we've seen in the last few weeks. Those assets have surged because the sentiment has been from looking at other alternative assets back into the safe haven for gold. We've seen the U.S. assets surge $2.8 billion over the last 4 weeks or so, and you're actually you're in positive territory in terms of assets garnered in U.S. ETFs.
What do you think is the biggest misconception around gold right now? Because you've been with the World Gold Council for over 2 years. You were previously with BlackRock. As you've transition to this new role, how have some new questions from clients started to surprise you?
The biggest misconception is that it's simply a momentum asset. Yes. Now, right now, we're going to have momentum have an impact if the price will move up or down. That's going to definitely play out. The biggest misconception is people ignore the fact that it's strategic in your portfolio or strategic in whatever pool of assets that you're holding, and that's where we want people to focus.
What percentage of your personal portfolio is
10%.
gold? Oh, interesting. Thank you so much, Joe, for joining us today.
Great to be here. Thanks.
Appreciate it.